morning, everyone. Namaste. My name is Sriram from the Commodity Research Desk at Reliance Securities. This is the weekly Bullion outlook. So, gold futures internationally gained for the week as the US Federal Reserve delivered a widely expected 25 basis point hike, but at the same time removed the language from its policy statement that it anticipates further rate increase would be needed. Domestically, we also witnessed the new highs for the MCX continuous futures contract testing a high of 61,845 during the week. So the metal was boosted by also boosted by increased safe haven appeal or safe haven demand amid rising risks of a global recession and fears of a wider contagion in the US regional banking space. Of course, the Fed chair after the policy said that the committee's current inflation outlook does not support the case for rate cuts, and additionally we also witness the markets also witness some profit taking after a slightly upbeat jobs number from the US on Friday. So some correction was anticipated ahead of that, and we indeed saw that. But looking ahead for the coming week, the key trigger for the gold and silver prices will be the US CPI inflation report that could impact the Fed monetary policy decision stance and the policy stance further. Of course, the easing inflation would prompt the Fed to maintain its the rate at its current level, or possibly even could see some form of a cut if indeed inflation eases further. Markets are currently pricing in 83% chance of US central bank holding their rates at their current levels in the month of June. So again, this CPI number will be an extremely important data for today. Of course, we also have the producer price inflation numbers, which is due on Thursday, and both data will have a major impact on what the Fed has to say going forward in the month of June. However, investors going forward will also seek a cover from the current economic uncertainty in the US and other countries like China. Recent weak trade data from the from China suggested that a slowdown can be expected from the country. Of course, a standoff over the US debt ceiling also strengthened negative sentiments in the markets, and this could support the safe haven appeal for the bullion going forward. So if any dips come after the CPI number, that can be met with some buying, but if CPI number remain elevated, then further correction can be expected for the bullion markets, because if the inflation remains stubbornly high, then we can see another rate hike by the Fed in the month of June. So all eyes will be on that inflation number tonight. So till that time, markets can consolidate, but after the inflation data and the producer price inflation numbers are out tomorrow, we see markets remaining in a broad trading band of 59,800 on the lower side to 61,900. Of course, these ranges will change after the CPI numbers and the producer price numbers during the week. For the international side, we see a broad trading band of 1970 on the lower side to 2085 on the upside of things. So that's it from our side. Thank you very much for listening. Have a pleasant day and a week ahead. Thank you.